Good morning, everyone. This is Ryan Edner with your Wednesday, October 30th morning market commentary. We'll start off with weather maps as we usually do. This time we're going to talk snow. The first map here is a day 1 to 4 snow, most of this falling here today and tomorrow. We've already seen some of the snow come down, but this is the snow that's left over for just today and tomorrow, the heaviest portion of it. System shifts slightly east. Obviously, there'll be a little bit of concern, mostly for the bean market, on harvest delays and maybe even a little bit of talk of quality concern. But we'll quickly shift over here to the 1 to 5 day total precip map, which includes that snow along with other rains being seen east of that line. And we see what we've been seeing all week, which is basically the western half of harvesting areas stay clear, and they're able to make some progress, while the eastern half continues to see rain and snow, keeping harvest pretty slow here. So maybe next week, when we come around to the harvest progress reports, we should expect some progress. There's plenty of dry areas here, but obviously it may not reach the pace that most would be looking for due to the eastern half not able to make much progress. Let's shift over now to the latest China headline over the Phase 1 agreement with China. We'll just post this quote here. You can read it for yourself. Generally, there are comments here to Reuters that this headline comes from. We're still trying to sound generally positive. They did step back and put maybe a little bit of doubt into the market yesterday with this statement. But as a whole, I think we do want to point out that most talks are generally positive, and the next big conversation as in regards to China will be this November meeting in Chile. Let's quick switch over to cattle here. I want to point out a couple things here. We already have futures assuming a $2 higher cash trade in for the cattle this week. So they're being quite aggressive, assuming good news. That comes on a 5,900 higher show list. Not a major number, but to assume $2 higher on a higher show list is a little bit rare. So we see that futures are getting aggressive. Some of that does come from additional fund buying. But what I want to look at here on this cattle seasonal chart is that from about now to early to mid-December, there is commonly an active setback. So we just want to put a word of caution out there that for the short term we could see a setback. As we see on the seasonal chart, usually the Feb cattle does finish quite strong, but there is a known setback this time of year. So we just want to raise that word of caution to anyone looking to buy cattle in the futures here short term. Let's also look back to see what this seasonal did last year. Here's a look at last year's February cattle chart. While the seasonal played out, it did play out a little late, but it certainly did play out actively. A drop from November 6th to January 11th in that February cattle dropped that market $15.70. Now, again, we see by the end of the life of the contract, everything finished plenty strong, but just want to point out a potential short-term issue here in the cattle while we're looking at all this aggressive buying going on here this week. So again, futures looking for about $2 higher. Last week's average cash trade was 110. So this would be futures pretty much telling us they're looking for a 111 bid this week. That eventually turns into a 112 trade.